Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Tom Mackenzie and Guy Johnson, who is today in Berlin. With the cash trade just less than an hour away, here's what you need to know. Bonds track Treasuries higher in the Asia session as signs of a cooling US labour market see traders bring forward Fed rate cut bets. We'll look ahead to the ECB decision due tomorrow. UK Prime Minister Rishi Sunak and Labour leader Keir Starmer clash over taxes in the first TV debate of the election campaign. Meanwhile, Indian Prime Minister Narendra Modi loses his majority in Parliament, forcing him to rely on allies to form a government. We will get the latest on both political events. Plus, we're live in Berlin for the world's largest private equity event. Don't miss our interviews from SuperReturn with David Hirschmann of Permira, Nortman of Monarch Collective and David Miller of Morgan Stanley Investment Management.
Let's check in on these markets then. We'll keep across Indian stocks as well. Later in the show, you're seeing a bit of a bump in terms of Indian equities after the rout of yesterday. But in terms of the future story for Europe and the US, on the back of the JOLTS data and a readjustment in terms of Fed expectations, European stocks pointing up by 0.5%. Again, the job openings suggesting there is further cooling in the labour market of the US. We have non-farm payrolls, of course, on Friday that will give us more detail on that story. FTSE 100 futures pointing to gains of 0.6%. The US 10-year, after yields fell 6 basis points yesterday, yields up just 1 basis point so far in the session today. 4.33 on the benchmark 10-year. Euro dollar at 1.08. Markets today starts right now.
Welcome to the programme, everybody. It is Wednesday morning, 7:01, just coming up to 7:02 here in London. As Tom was talking about just there are things to talk about when it comes to the markets. He was talking there about what's going on in Treasuries, the JOLTS story very much in focus, and at the margin perhaps increasingly thinking about pricing back in some of those rate cut bets. That's a focus. The ECB, certainly a focus. Guy is with us, though, from Berlin, of course. We mentioned at the top of the programme, that's where he is. We are going to be bringing lots of coverage from SuperReturn, but Chrissy is in the same city as you guys. This is confusing, but stay with us for SuperReturn. But you're there because you've been tracking the fortunes of the aviation sector.
Yeah, two of the three of us are in Berlin today, which is a strange thing. I saw Chrissy briefly last night. She's here for SuperReturn, as you say. So I've come out of Dubai, where we had IATA, via Doha into Berlin for the aviation conference that's been taking place, that took place here yesterday. We caught up with Guillaume Faury of Airbus. I caught up with the CEO of Boeing, Dave Calhoun. Lots of really interesting conversations coming out of that. I have to say, guys, look, I think it's really interesting what SuperReturn is going to be delivering a little bit later on. Chrissy's got some fantastic interviews lined up there. What are we going to learn in terms of how they see the exit story, what's happening with the macro environment? I think that's really interesting. My takeaway from the last few days, the consumer is still in really good shape. Demand for travel is absolutely enormous out there and looks like it's going to continue. Guys, the market seems very hung up on this JOLTS data, which I'm a little surprised about. We'll get our guest take on what is happening with the US economy, because we've got these great guests, as you can see, lined up for us coming out of SuperReturn. What is their take on what is happening with the economy? The take from the aviation sector, definitely. Demand remains strong and is likely to be so for quite some time. Supply chain bottlenecks are still an issue. That's going to be inflationary. And I wonder how that feeds broadly into what we're going to get from the ECB tomorrow, the big picture with what is happening with the US economy as well. I think you want to put all of that in. But the picture certainly that I've been hearing from the last few days, people have been talking to me about just how strong consumer demand is, particularly in the United States.
This is why Guy Johnson is so passionate about the aviation sector. He's always made the case. He's got that expertise, of course, Guy, but you've always made the case this is a macroeconomic gauge as well. And so you tie in the consumer. And look, you're talking about that strength. You're saying you heard that very clearly from executives on the ground in Dubai. But the job openings data, look, Mark Cudmore was saying you've got to put some context around it. Non-farm payrolls, in his mind, is more important. But it is remarkable. We've gone from 2 to 1 in terms of the ratio of job openings to 1 to 2. So 2 positions open for every 1 worker during the pandemic, now to 1 to 2. So that has marked, and the move down in terms of the broader picture, the total number, 8.03 million or so. So there is this cooling that's going on, and I wonder when that starts to hit the consumer then.
Yeah, is this? But the JOLTS data is really interesting, isn't it? This is openings that are available. It's always been a slightly murky pool in understanding exactly what is happening there. A lot of companies were probably labour hoarding. They were advertising for more jobs than maybe they actually needed. I think the claims data on Thursday and then the data we get Friday, I think is going to be much more interesting in terms of what it's really going to tell us about what's happening with the economy.
Yeah, so we've got more jobs focus, as you say, as we go through this week. And Guy, ECB in focus as we get to tomorrow. Nice story out on Bloomberg News talking about the relationship between cuts we've seen in the past and what that's done to stocks. And it is a positive driver for stocks, and it has been. And especially this time because the ECB is going before the Fed. It's not going before all the central banks, of course, but it's going before the Fed. Guy, we spoke to Helen Jewell at BlackRock yesterday, and she was talking about how tomorrow is a done deal for her, but it's really about what happens from then on, what the guidance is for the rest of the year. And she says if the guidance is there's going to be more cuts coming, then you lean into small caps. That's been an area of Europe that she says has been underappreciated.
But isn't the narrative maybe this morning that actually maybe that doesn't come and the market could be surprised by the fact that maybe the ECB is being a little bit more cautious? The other story that we've all read this morning is the fact that maybe the inflation picture here in Europe maybe more closely resembles what we're seeing in the States than we had originally anticipated. There was this kind of idea that Europe was on the right course when it comes to inflation. If that turns out to not to be the case, then that undermines Helen's case, doesn't it? We'll see exactly what the commentary looks like tomorrow, but I think it's going to be fascinating. And again, you come back. Look, behind me, they've just built a massive football goal. Europe is getting ready. I don't know if you can see it on the other side of the Brandenburg Gate. They've just built a massive football goal. Germany is getting ready for the Euros. Huge, great consumer experience story that is going to be kicking off in just a few days. And then a few days after that, Paris. You go to the Olympics. Europe is going to be the place to be this summer, and it's going to be a consumer that potentially has strength and a consumer that is willing to spend. Maybe these two stories are emblematic of the fact that the consumer is not out in Europe, and inflation on the services side and potentially on the manufacturing side as well is going to be more sticky.
Well, if Europe's the place to be this summer, then Berlin, certainly with Danny and Critty, is the place to be. Oh, and Guy is the place to be. Is the place to be.
Enormous goal. I think even I could score. Even I can play football. I think we need to set that up. I love that. Kicking it through the Brandenburg Gate. There goes Anna Edwards, top right-hand corner. So we talk about Europe. We've got European elections, of course, this week. Before we get there, we've had, of course, the debate, first TV debate between the two leaders, the two main parties, of course, the Conservative Party, Rishi Sunak, Keir Starmer of the Labour Party, with that poll lead, at least for now. Yes.
Did you stay up and watch for it?
I did, which is obviously a mistake when you get up at 3:30 in the morning. And I should know better, frankly.
Because it kicked off at 9 p.m. What stood out to you?
Well, tax. I mean, I lost count of the number of times that Rishi Sunak said tax and accused the Labour Party of being the party that's going to put up taxes. Then we've heard from Keir Starmer saying that was nonsense. But that was very much the attack line that we heard from the Conservatives from their perspective. So that was one thing that certainly stood out. But what was interesting to me, actually, was a lot of the line of questioning that was chosen. It was about a lot of the economic fundamentals that we talk about, cost of living. It was about, and it was also about public services and how you fund them and the debt constraints that will face any government that comes along. So actually a lot of our coverage very much at the forefront, really, of what is going to be talked about and what is going to matter in the UK conversation.
Guy, the immediate take on the back of this debate was that it was a very modest win for Rishi Sunak, but maybe it doesn't really move the dial in terms of the electoral prospects. We'll see how that unfolds, of course. There was also the likeability question, because he came out, you know, all guns blazing. He was pretty aggressive, but also some laughs when he made a bit of a misstep over the NHS. I don't know if you got to see it, Guy, but whether you think this is it even important? We've got another TV debate between the two at the end of June.
Tom, I think if there's one thing that we've learned this week is that we are very bad at underestimating how big an impact politics can have on markets. You look at what's happened in India over the last few days. Markets got that completely wrong, and it's turned out to be a really big factor for the economy there, for the markets there. Everybody I've been talking to over the last few days in Dubai and here wants to know what's happening with the US election. That's the one they can't call. That's the one they all really care about. And they don't know, and they're really struggling with it. The UK looks like it's a done deal. But at the beginning of the weekend, I thought the markets thought that Modi was a done deal as well. I think the politics story is a wild card for markets that I don't think is fully embedded yet into the narrative. And maybe that's something we need to start thinking about post this Modi story in a bit more detail.
Certainly, and depending on who is in the running and the policies they have in mind, whether markets will want them to have control and agency and majorities is going to be, of course, front and centre, and that makes the results difficult to interpret. That's certainly something that's been standing out from our conversations over the last 48 hours.
Yeah, and changing views in terms of the investor take as well on Mexico, given the win there as well, and concerns that maybe the policy agenda, or at least the market-friendly policy agenda, may not be coming through. In terms of what else to watch out for today, then, 10 a.m. UK time, we're going to get Euro area PPI, producer prices, and PMI data as well. That's 10 a.m. UK time as we talk about the relative strength coming through for the European economy ahead of that expected cut, of course, from the ECB tomorrow. 2:45 p.m. UK time, meanwhile, we're going to get that Bank of Canada rate decision. It could be a pivotal moment for the Central Bank of Canada. 3 p.m. UK time, US ISM Services Index after the manufacturing gauge, of course, came in softer than expected. And later, we're going to get earnings as well from Dollar Tree, touch there on the US consumer, Lululemon and Campbell's. Is that the soup maker throughout the day as well? We're also going to get coverage, of course, SuperReturn International. Kriti Gupta, of course, and Danny Berger on the ground, speaking to some really, really fascinating characters within that ecosystem.
I think some of the lines coming out of SuperReturn really interesting, and we had an incredibly well-placed interview with Apollo just this morning, and Danny Berger was there talking to Apollo about what they're doing with Intel, and they're buying a stake in Intel's Irish operations, essentially, and this allows Intel to spend more money on investment in plants. But what we heard from them, Guy, really interesting, they were saying that more Intel-type CapEx deals are to come. So we're going to see more of this from private equity, where they are putting their money to work, which will enable businesses to go away and do CapEx. And that seems like an interesting driver for the CapEx story that we need to watch, especially in a world where there's so much pressure on nearshoring and reshoring and manufacturing facilities coming home, and also CapEx spending on AI very much anticipated.
Private credit's definitely going to want a piece of this pie, isn't it? It needs to figure out a way of investing into this infrastructure story, and maybe this is the way that it ultimately does it. I also thought the comments that Danny got out of him, talking about just the different environment you have on either side of the Atlantic, how well developed the capital markets are over in the United States and how lacking and anemic they are here in Europe, and how big a challenge that therefore represents for Europe. We've talked recently a lot about this and how Europe needs to get into gear. The politicians are talking about it. But it feels like the difference is stark in terms of the investment case on either side of the Atlantic.
OK, lots to come on all of these stories as we go through the next 2 hours or so. Coming up, UK Prime Minister Rishi Sunak and Labour leader Keir Starmer clash over taxes in the first TV debate of the election campaign. We'll bring you further analysis later on, not having too much of an impact on markets, it should be said, right now. Up next, we are live from SuperReturn International, the world's largest private equity event. Let's find out what to expect. We've mentioned that Kriti Gupta is there. Here she is in Berlin. Kriti.
Yeah, Anna, Tom, Guy, this is going to be a major story in terms of where the money is going. Is the private markets making up for some of the kind of step back that the banking sector is taking? Plus, how are they navigating this higher interest rate environment? And is this where the cracks finally show in the global economy? We're going to ask our all-star lineup in all parts of the world that very question.
OK, if you have any questions you'd like to push into the conversations, then do get in touch. Plenty coming from Berlin. As you can see, the goal set up for the Euros. Guy's there, Kriti's there, Tom and I here in the studio in London. Whoever your messages are aimed at, we do love to hear from you. Please get in touch. IB plus BBTV Go is the function to use on the Bloomberg terminal. This is Bloomberg.
Companies all over the world are facing unprecedented levels of CapEx, right? Digitization, deglobalization, energy transition, and they're starting to think more creatively about how are they going to fund this, how are they going to fund this capital, and private capital is going to play an increasingly important part of that.
That was Scott Kleiman, co-president of Apollo Asset Management, speaking to us at SuperReturn in Berlin after Apollo agreed to take a 49% stake in a new Intel plant in Ireland, the deal worth $11 billion. Let's get more then from SuperReturn, the world's largest private equity event. Our markets today, co-anchor Kriti Gupta standing by with another great guest. Kriti.
Yeah, Tom, Anna, Guy, this is such an important event to be at because we're talking about record amounts of money going into the private markets, specifically perhaps stepping in for some of the banks, especially when it comes to the credit space. It was just a couple weeks ago where Jamie Dimon over at JP Morgan said this is maybe potentially where the cracks could potentially show up in an otherwise fairly rosy picture. Let's see if that holds true. With me now, David Hirschmann, co-head of credit over at Permira, joins me. He's got about a 17 billion euro AUM. David, a pleasure to have you on the program. Thank you so much for joining us.
Thanks for having me.
Let's start with the macro here. We are hours away from an ECB decision that is largely consensus expected to be a cut. The future, the guidance after that is in question. What's the read-through in terms of the interest rate environment in private credit? How does it differ from, say, any sort of stagflationary fears?
Sure. Well, I think there's two things to say about that. There is generally an expectation that interest rates are going to come down progressively. We've all been talking about higher for longer interest rates, but in the long run, we do expect base rates to be in the 2 to 3% range, which is kind of the sweet spot that helps to balance goals of financial market stability, stable inflation, and also sustainable economic growth. So we think that's where we are heading. Now, all our loans have floating rates. So the impact is, on the yield is actually quite limited. We've been in a very low interest rate environment for a very long period of time, abnormally low. And so we think that bringing this stability in the market is actually a good thing. It will also help to accelerate the sort of velocity of capital, which clearly has slowed down in the last couple of years.
Well, that slowdown is largely driven by some of the biggest banks, your global Wall Street banks, private credit really stepping in to fill that void, to your point. What does that partnership look like? Are you actively competing with the banks for deals? Are you partnering with them? What does that dynamic look like?
It depends very much on the deal size. What you say is true for large cap deals, I would say 100 million euro of EBITDA or more, where last year in particular, there was very limited capacity, underwriting capacity from banks to finance those deals, and private debt funds stepped in particular the large players. However, in the mid-market, which is where Permira Credit we focus on in direct lending, that is not the case. Mid-market being, call it 20 to 80 million euro of EBITDA, maybe up to 100. That market is very much dominated by private debt funds and not by banks. This is a market where companies do not have access to the broadly syndicated loan market anyway. So that doesn't affect the dynamic and the competitive landscape between debt funds and banks.
But you do admit there's a competitive landscape. This is a growing industry, I think $1 trillion by the end of the decade. When you talk about the competitive landscape and operating in the middle market, are you feeling any pressure to do bigger deals, especially as the bigger players kind of ramp up that business?
It's not pressure to do bigger deals, it's an opportunity to do bigger deals. The market has evolved over the last 10, 15 years to a place where the large players in private debt now have capacity to put together financing either as sole lender deals, which is the majority of transactions, or as club deals with debt quantums of up to 500-600 million, up to €1 billion. And that gives us access to those larger businesses. So the opportunity set has increased for private debt funds, which is a good thing. It doesn't increase the pressure for us to deploy capital. It gives us an opportunity to operate in the larger end of the market.
It sounds like a lot of optimism here, and critics of the industry would argue perhaps too much optimism. When things grow too fast, there's always going to be a concern of when the party stops, when the music stops. Talk to us about perhaps the concern around default rates. There seems to be some sort of complacency around it, not a lot of expectation around an uptick there. How high could defaults go?
Well, I mean, that's obviously a very good question, and there's a couple of things to say. I think the last 2 years we have seen deals being done with a higher interest rate environment, so a higher interest burden for companies. So that was basically factored into the structure of those transactions. The issue may be for deals that were done prior to interest rate hikes in 2021, when leverage multiples in some cases were elevated, and those companies will struggle and have been struggling to service debt, especially if leverage was 6 to 7 or 8 times, that clearly is a high risk for those businesses. We have taken a very conservative view during that period of time. Our average entry leverage multiple is below 5 times, and so we have not taken that elevated risk more into sort of mezz or PIK territory that we think effectively puts those companies under pressure. So when it comes to default rates, clearly in a higher interest rate environment, default rates should increase. It seems to be, for the last couple of years, a marginal increase in default rates, and that's also because European economies have held up well. We are definitely in a better economic environment than we were a year and a half ago, with inflation cooling down. And so clearly that helps to maintain the stability and the growth of those businesses.
So when it comes to then, and I can appreciate you're in the private credit business, but when it comes to the relationship with the private equity side of things as well, there is a mismatch between buyers and sellers. And you hear that over and over again. That's the exact verbiage everyone in this industry uses. Who has to snap? Is this just a matter of getting used to a dynamic where either buyers or sellers have to get to higher valuations? Is that the new normal?
Well, yeah, and I think you're right. Now, that gap has narrowed. If I look at the volume of transactions, the deal flow in the first half of last year compared to the first half of this year, there's clearly a pickup in activity. And so that gap is still there, but it's much narrower than it used to be. And there is also pressure on asset managers and sponsors to realize assets, to distribute money back to investors, going back to the point about the velocity of capital, which has slowed down. Investors look at their DPI multiples, how much money has been distributed. So I think there is a backlog of transactions that were supposed to happen in the last 12 to 18 months that have been delayed, but they are coming, and we're seeing that in the pipeline today.
And we'll, of course, get an update from you as soon as possible. David Hirschmann, co-head of credit at Permira, of course, talking to us about the possibility of default, cracks in the market. This optimism is really going to last. Plenty more ahead, guys. Tom, back to you.
OK, Bloomberg's Chrissy Gupta at the SuperReturn event in Berlin. As Chrissy said, plenty more interviews throughout the next few hours. She's going to be joined by guests including Keir Nortman, co-founder of the Monarch Collective Investment Fund, David Miller, Morgan Stanley's head of private credit and equity, and of course speaking to private credit there just now, and Danny Berger previously talking about that Intel deal with Apollo, and Apollo saying that they are open to more deals of that kind of size and scope, particularly within Europe as well. But Chrissy also pointing out that there is concern within the banking sector, amongst some of the big Wall Street giants, but also amongst regulators about the size and scope, just to what extent this industry has rapidly expanded.
Absolutely. So the IMF and some other bodies calling for more transparency when it comes to some of these private markets. But this has been a call we've heard for many years, hasn't it? And this has been an industry that's been growing for many years. So we're going to continue to monitor that. Interesting there, some of the topics that were being discussed, higher for longer rates, bigger deals, defaults. When we get to private equity conversations around the UK, it'll be interesting to talk politics, because carried interest in the Labour market, the Labour Party's plans, if they were in power, around carried interest could be really interesting to get the industry's take on. And thinking about the UK and the political landscape, coming up, Rishi Sunak and Keir Starmer face off, the first TV debate of the UK general election. It saw the two leaders trade barbs over rival tax plans. But who was the winner? We certainly had some snap polls that, well, it wasn't quite 48-52, but it was almost. Always seems to go that way. We'll discuss that next. This is Bloomberg.
We will raise specific taxes, and we've been really clear what they are. We've already dealt with the tax break on private schools. We want to end the non-dom status completely. I think that the super rich should be paying their tax.
Independent Treasury civil servants have costed Labour's policies, and it's £2,000. But you asked for specifics,
nonsense.
Really. So let's have a specific difference.
Please let
I've
Mr. Sunak
announced
finish.
The triple lock plus, so that we raise the personal allowance for pensioners and ensure that the state pension is never subject to tax. That's all you'll get under a future Conservative government. Keir Starmer hasn't matched that pledge, which means for the first time in our country's history, if Labour are elected, pensioners will pay tax. I do not think that is right.
Prime Minister Rishi Sunak and Labour's Keir Starmer, they're clashing over taxes in the first TV debate of the UK election campaign. I did start out trying to count the number of times that Rishi Sunak said tax, and I quickly lost count. Let's bring in Bloomberg's UK correspondent Lizzie Burden, who has been digesting all the twists and turns from the event. We both stayed up, Lizzie, to watch, which is foolish, obviously, given the early starts. But was there a clear winner? There rarely seems to be anything to do with UK politics.
I'd say it was hard.
The public.
Yeah, I'd say it was hard to judge if anything was won or lost or learned even in the 45-second answers that they were able to give. YouGov polling showed that marginally the Prime Minister came out on top. In terms of those numbers, whose message dominated, we did do a tally, actually. 56 times was the word tax mentioned. 13 times the Prime Minister said that Labour would raise the average Brit's taxes by £2,000. Only 12 times did the opposition leader Keir Starmer manage to say that people wanted a change after 14 years of Conservative rule. So the message dominating was Sunak reaching for this tried and tested Tory tactic of painting Labour as tax raisers. Now, beyond saying that that £2,000 number was garbage, it did kind of seem that Starmer struggled to rebut it on the fly, and hence why at 10:41 p.m. we got a press release from Labour with a proper rebuttal of it. The thing is, Sunak may have managed to do it in the debate, but it came at the expense of his likeability. So another poll from Savanta, a Snap poll, said that Starmer came across as more honest. And a bigger Survation poll that was before they went on the set showed that Starmer's on course for the biggest landslide in UK political history. So 2 percentage point win on the night, perhaps not enough to move the dial at the election, which of course is all that matters.
And that poll suggesting again, and some would read into that, the stakes were higher, arguably, for the Prime Minister than the opposition Labour Party leader. Yeah. So on that point, did Starmer? You're saying that Starmer didn't really succeed in kind of rebutting 56 times Sunak brought up tax. It didn't really succeed in rebutting that fully. So they came out with this press release. Did Starmer land any blows? Did he need to?
But of course, it doesn't matter how many times you mention it; it's how much you touch the public's hearts, isn't it? And judging by the audience in the room, the biggest groan came when Sunak said that NHS National Health Service waiting lists had come down. Starmer pointed out that they'd gone from 7.5 million when he made the promise to cut them to 7.2 million. So there was a lot of head scratching, and actually the biggest laugh came at the Prime Minister's expense.
Great stuff, Lizzie. You look remarkably, as does Anna, up and about this morning, given the fact that you've both up late last night.
Thanks, Guy.
Watching the debate.
Well, I said I felt sorry for the moderator because she had to, fend between these two boisterous gentlemen, which is rather like her with just you and Tom.
Yeah. Well, maybe, yeah. It did feel as if you almost had to. There was a point at which probably like hands in the air would have been maybe a way to go forward. Can I interrupt here? It did feel as if maybe some teaching skills from the classroom would have been better applied to this. But yeah, it was fascinating to watch. I watched the highlights this morning. I didn't stay up last night. So let's talk about another election that we're watching. It does seem as if elections are having a significant impact right now. Elections to the European Parliament, and I have to say Berlin is plastered with posters around this issue. They are going to be kicking off tomorrow. 27 countries voting over the next few days. Of course, the war in Ukraine means security has played a critical role in these election campaigns, especially the further east you go, which seems entirely logical. Let's bring in our Polish bureau chief, Piotr Skolomowski. Piotr, let's talk about this security story and how big a factor it is going to play for Europeans heading to the polls this week. There's not only the issue of kind of how we defend ourselves, but it's also the issue of how we pay for it as well.
Hi, Guy. Yes, indeed. So the vibes in the campaign ahead of the European elections are very much different from what you've been just describing in the UK. The question of security is very much at the forefront. And, Polish Prime Minister sort of summed it up very well when he said, if you don't want to go to war, go vote, which is sort of how he's trying to portray himself as a sort of gatekeeper for the security for Europe, but also for his own country, for Poland. And obviously, the way he's been trying to present that is that, there were several or more than a dozen events where there were cases of sabotage in Poland and across countries like in the Baltics, for example. There are issues with Belarus probably weaponizing migrants by sending them over the border. So one of the centerpieces of the campaign for Donald Tusk has been that he's going to build what he called Shield East, which is sort of fortification along the border with Belarus, but also with Russian enclave of Kaliningrad. So this has been something that he's been trying to present. Obviously, it also plays locally in the sense that, he won the general election in October. It was a bit of a surprise, but before the election, he was portrayed by the current opposition as weak on defense. And he's trying to outflank them. Obviously, they're very populist. He's trying to turn the tables on them by showing, well, actually, I'm the one who's there to defend Poland and the EU and make sure that the border is secure.
So security is clearly a big focus from a Polish perspective then, Piotr, and that's completely understandable. I know that applies to many parts of Eastern Europe. In terms of what's going on in Hungary, that's been at the centre of controversy, but more from a sort of European unity perspective. Do investors have questions and concerns around the Hungarian perspective here?
Yes, indeed. So Hungary has been something of an outlier in this whole debate about Ukraine. We can't really say Europe is united in supporting Ukraine, but when it comes to Hungary, they were always an outlier. They were trying to stall on all sorts of aid that was being sent to Ukraine. Obviously, it needs support from all member states. And Viktor Orban, he had a rally for his supporters over the weekend, where he basically said, we are the only government in Europe that's there for peace. So his message is, we are there for peace to make sure that there is no war with Russia, and all the other countries are actually sort of the war camp. Obviously, Orban is having his own problems. So that's something that worries probably investors as well, or actually is being a focus, because for the first time in many years, he has a challenger and that's Peter Magyar. He's a former insider of his administration who came out against corruption of his administration, and he's polling quite well. Obviously, he's not going to win this election. It's also a local election for Orban, but it seems like for him, that's an opportunity to actually present himself as a first viable candidate that could challenge Orban. Orban, who has been in power for 5 terms right now, he's obviously been a thorn in the side of the EU. He's been, as I said, sort of trying to break the unity in the EU when it comes to Ukraine. So things can actually change, the dynamic can change, and the opposition may finally get some momentum in Hungary thanks to this election. So they are important for Orban and also for investors who are looking at Hungary right now.
OK, Bloomberg's government and economy editor for Central and Eastern Europe, Piotr Skolimowski, on the implications potentially, particularly for the east of Europe, around this election in Europe. Piotr, thank you very much indeed. Staying on politics, but switching focus to India, where Narendra Modi is vowing to stay on as Indian Prime Minister, even after his party lost its parliamentary majority in a stunning upset.
Today's victory is the victory of the world's largest democracy. This is the victory of unbreakable allegiance put into the Constitution of India. In our third term, this country will see a new chapter of big decisions. This is Modi's guarantee.
OK, let's get more from Bloomberg's Ruchi Bhatia in terms of how these coalition talks are proceeding. Ruchi, what do we know in terms of the pressures on Narendra Modi and what maybe concessions he may have to give away to form this coalition to ensure that he has the majority needed to govern?
In fact, after yesterday's upset, today is all about coalition talks. And remember, this is really the first time in almost a decade that Prime Minister Narendra Modi has had to rely on his allies. Now, the two kingmaker parties together have about 28 seats, which will be needed to reach the magical 272 mark, which is the halfway mark that is needed to form the government out of the 543 seats that were up for grabs. It is quite interesting to see that just a few minutes ago, we did hear from one one of the kingmakers, Andhra Pradesh's TDP, where the head of the party, Chandrababu Naidu, pledged that he will be forming the government. He will be a part of the NDA alliance along with Narendra Modi. But remember, coalition politics is never easy. As I said, this is the first time in almost a decade that Prime Minister Narendra Modi has had to rely on allies. And these two kingmaker parties have traditionally traded barbs at Modi's BJP as well. They have switched sides in the past as well. And it is not going to be easy. They will seek a pound of flesh from Modi. They will seek chunkier portfolios from him, perhaps. And what has put a spanner at works is also the fact that we hear from sources that the opposition parties are also going on a limb to woo these two kingmakers. So we will have to see how these discussions really pan out today.
Rishi, we've seen how the markets have reacted. They don't like the uncertainty. They don't know what's going to happen. Investors, therefore, are marking down or have marked down significantly Indian assets as a result of that. We just don't know at this point what this government is going to look like, and particularly we don't know what policy is going to look like as well. What does this mean for Modi's reform agenda? How different will it look as a result of this election result?
In fact, you heard the soundbite just before this hit where Prime Minister Narendra Modi said that he will look to usher in a new era of reforms. But it's not going to be easy for him because, when you are forming a government with allies, you will have to reach out to them for each and every decision, which means some of the deep structural reforms that India really needed when it comes to the farm sector, land, labor reforms, etc., that will take more time. He will need more political capital. Having said that, various economists that we've been speaking to, they do say that India's long-term growth potential still continues to be between 6.5% to 7%. But to really get to that 8% mark, which is needed to reduce inequality, which is needed to create more jobs for the large working population, you do need an 8% growth, for which you need structural reforms. And whether Modi will be able to get those key reforms going in the third term is something that we have to wait and watch out for. Having said that, we must also tell our viewers that we have seen under coalition governments in the past some of the big ticket reforms being happening for the Indian economy as well, especially in the year 1991 when India's liberalization happened. So one will really have to see how the government will walk the talk on reforms and will be able to keep their allies together.
Rishi, thank you very much. We'll continue to watch those coalition negotiations then. Rishi Bhatia joining us there with the latest on the Indian elections and all of the twists and turns that has taken. A quick word on some of the news we've had coming out of the tech sector. NXP and TSMC affiliate, they're planning a chip plant. This is going to be in Singapore. That will be for $7.8 billion, Guy. It's going to be making chips that are used in automotives, industrials, consumer, mobile products. A bit of a win for Singapore here, but also just the latest instalment of a diversification play in terms of geography of manufacture for all of these chip makers.
Yeah, we've been talking about what's been happening with Intel and the investment we're seeing from Apollo coming through. Again, part of that same narrative, Anna. It's rippling across the world and having quite a significant impact. What do we need to do next? We need to talk about what stocks you need to be watching as we come towards the open. There's one that really stands out this morning. Inditex, the owner of Zara, reporting a beat on the operating line for the first quarter. We have seen a slowdown. Things are slowing down, but not as fast as anticipated. That sounds familiar, doesn't it? We're going to talk about what is going to be the stock story this morning on that one. That's next. This is Bloomberg.
Welcome back to Markets Today. We are 12 minutes away from the start of cash equities trading. The European equity market futures picture looks pretty positive. Bear in mind we were down heavily yesterday on the back of the weakness in the oil price and the weakness then in oil stocks. So we take that into today's session. US futures point higher, but only slightly, up by 1/10 or two of 1% on the major markets. Let's talk about the broader global macro themes. And we're joined by our Markets Live executive editor, Mark Cudmore. Mark, good morning. Let's talk about markets in 2 minutes. And we'll do that around politics and political risk. We addressed India a little yesterday, but given we've got so much political risk in the markets, in particular it's playing out in emerging markets at the moment, I noticed with interest that Goldman Sachs says buy India stocks on election-related weakness. So they're clearly, on a medium-term perspective, not put off.
Yeah, I don't think any of the fundamentals have really changed from any of the big election stories this week. I'm ignoring the long-running ones of the US and the UK, but looking at Mexico, India and South Africa, where we've had massive disruption, this has been about a blow-up of positions, a blow-up of carry trades. Mexico fundamentals turned more negative about a month ago, and therefore, the carry trade seemed to have kind of run its course already. It's really now we're kind of backfitting the narrative after this disruption. We've kind of blown up stale positioning, but fundamentals have not really changed there. And therefore, I have sympathy that if some of these sell-offs go too far, it is very tempting to buy the dip because it's likely noise that will pass in a couple of weeks. Now, the only thing I'll say about India is that Indian stocks were priced to perfection going into this election turmoil. So therefore, I think there could be a little bit more of a retracement before it looks opportune to get involved in the longer term, great demographic structural reform story.
Yeah, interesting what has changed then, and also what you think or what investors might assume hasn't changed then through all of this political noise of this week. We'll wait to see how that plays out. In terms of things that are on the agenda for this week, the ECB still looms large. Of course, we've got the jobs report out of the United States. I wonder what's going to be most interesting for markets. The ECB described to me yesterday by one guest as, it's a done deal for tomorrow, but it will all be about the outlook for how many cuts we get this year and into next.
Yeah, look, if the ECB provides a clarity around its rates path, then that could be a real market mover. I think, unfortunately, they're going to fudge it and disappoint, and they're going to move even more towards the data dependence angle that the Fed is talking. So that might be a bit anticlimactic. I think the jobs report is really important this week, and of course, ADP and initial jobless claims always important in terms that we are seeing some softness in the US data. Is this just a temporary blip, or is this early signs that we're finally seeing the US economy roll over? I'm currently favouring the temporary blip stance.
OK, Mark, thanks very much. We've got Markets Live executive editor Mark Cudmore with thoughts on global market themes. You can get all of that global analysis of markets. MLIV Go is the function to use to get the thoughts of Mark and the rest of the authors on the Markets Live blog if you want to find it on the terminal. Let us get to our stocks to watch segment. And I'm looking at Inditex, the fashion retailer, reporting first quarter earnings that met analysts' estimates. That seems to downplay the excitement a little bit. Sales growing, though, single digits. What's interesting here, the heady growth that we had seen for this particular business dipping into single-digit territory in the third quarter of last year, and that seems to be where we've settled on this particular story. So we'll continue to watch how the consumer plays out on this front. Guy, you've got another angle on consumers.
Yeah, let's talk about what's happening with the car sector. We've been noting, we've seen it in the latest data, the EV story is stalling in Europe. I found it fascinating. I'm going to come back to the massive football goal behind me, Anna. Volkswagen is not the sponsor of this football event that is about to happen here in Europe. It is BYD. The Chinese EV maker is stepping in to the void left by Volkswagen. Clearly, the Chinese see Europe as being a major opportunity. We're going to have a lot of, I suspect, advertising around the Euros as we kick them off in a few days' time with the car sector, but it's going to be the Chinese that are going to be pushing that story. So Stellantis and Mercedes are pausing major investments in a plant surrounding batteries. And I think it's really interesting that this is where the tension is going to be. And I wonder whether this feeds into the politics as well. The Chinese want to get involved in this story here in Europe, but it's not happening in the way that everybody anticipated. And the European car makers are really struggling with this one right now. And that's what the stocks have been doing year to date. They are reflected, this story is reflected in some of those numbers.
Yeah, watching how politics is influenced by this football is going to be quite interesting, because I was reading this morning, this from a very UK perspective, but there's plenty of politics playing out in very many parts of the world this year. This is a European Championship, of course, but apparently the UK election has not been at the same time as the Euros since 1970, and at that time people drew links between an early exit from the England team and then what happened in the election. So I don't know, another curveball, do we call it, Tom, that to factor in as we look ahead to UK politics. But thinking about UK politics, you've got home builders in focus, and there's clearly an election link there.
Yeah, certainly when you think about the BOE, of course, Rishi Sunak, the Prime Minister, saying that rates will come down. Well, it's not really within his remit. It's more of the Bank of England, isn't it? Arguably, and that will tie into views around, of course, the house builders. In terms of expectations, you get lower rates, of course, coming through the BOE will be supportive for home builders. But do you start to build positions now in anticipation? Markets expecting that cut doesn't come through from the BOE until at least August. But you've had an upgrade in terms of Berenberg coming through, raising UK home builders to a buy. Also raising the analyst at Berenberg the target for Berkeley Group holdings to £62 from £54. That's an 18% upside from here. So maybe worth watching the UK home builders on that move, or at least the adjustment coming through from Berenberg on the back of that.
OK, so European equity markets are expected to bounce a little this morning, or more than a little perhaps, could be up by 0.5% or so, bearing in mind, of course, we were weighed down by that oil story yesterday. So that's the backstory for Europe, and we keep that in mind. US futures then do show a little bit of upside, but not quite so much. We're waiting for the ECB tomorrow. We're waiting for the jobs report out of the United States on Friday. So both of those set-piece events will be very much in focus as we get started here in Europe this morning. Plenty more coming on markets today. We'll bring you the European market open next. This is Bloomberg. Welcome back to Markets Today. A few minutes to go until the start of Wednesday's cash equity trading session. Good morning, everybody. So just minutes to go, and the picture yesterday was a very negative one, actually. Weighed down significantly by energy stocks. They were down by more than 2%, 2.6% by the close. Basic resources down 2.3%, Guy. This was the story of the last couple of days, and maybe went under the radar on Monday, the response to the OPEC Plus decisions over the weekend. But by yesterday, it was certainly front and centre for markets, and it was having an impact. So that's the kind of legacy that we approach today's session with. US futures, though, a little more buoyant, up 0.1%.
Absolutely. It seems to be pricing in this idea that maybe yields do come lower. I'm surprised that the markets are reacting as much as they did to the JOLTS data, given the fact that we've got so much other data coming up throughout the rest of the week. You've got the claims data tomorrow, and clearly you've got payrolls on Friday. But it was interesting to see just how kind of everybody focused on this. I'm not sure how much has really changed, though. But equity markets are always looking for the glass half full kind of an option, aren't they? And that certainly seems to be reflected in futures today.
Yeah, European futures pointing up by 0.5%. Talking commodity space, you touched on energy. The pressure continues marginally around oil, and there was a report out around stockpile build-up in the US. So Brent at $77 a barrel right now. We're looking at copper as well, back below 10,000. Iron ore also under a bit of pressure, so maybe check in on the miners as well at the open in the next couple of seconds. Also looking at the automakers. Guy was bringing that story to us about delaying plans around EV battery components. The house builders in the UK and Inditex as well as a gauge on the consumer.
Yeah, absolutely. So we'll focus in on Inditex, that European consumer in focus. As you point out, basic resource stocks worth watching, especially after the negativity of yesterday. It wasn't just energy stocks under pressure, but basic resources as well. So we could see some bounce there. We'll continue to monitor the many strands of political risk that seem to be playing out for markets, in particular in connection with emerging markets this week. All of that very much front and centre. So European equity markets then opening up this morning. And Tom, I see the FTSE 100 out the gates up about 0.1%. The DAX up 0.2%. So we are seeing a bit of a rebound, slightly more modest than anticipated, perhaps. The DAX now up by 0.4% as we wait for the ECB and the jobs report later on this week.
And look at the Inditex story as well, lifting the IBEX over in Spain, up 0.9% on the index, up 4%, close to 5% on the back of those earnings that broadly were in line. But it was the sales number, I think, possibly that analysts are hanging their hat on in terms of the upgrade, or at least the number that came through, 12%. The margin story looks a little bit better for Inditex. And, of course, you tie that into expectations around rate cuts. Maybe the outlook for some of these consumer-related companies is looking a little brighter, Guy.
Tom, this is the story, though, isn't it? And let me just kind of tie this back into the conversations I've been having over the last few days with airline executives. I talked to Ed Bastian about this from Delta. You talked to what is happening over at United with Scott Kirby. You talked to Ben Smith over at Air France KLM. They're all talking about a consumer that still has the potential to go out there and spend. They're still talking about this really buoyant consumer. Now, maybe that is at the top end, but that certainly seems to still be the driving force when it comes to the consumer picture, both in Europe and over in the United States. And it does seem to continue to confound expectations just how buoyant the consumer is. And another reflection of that in these Inditex numbers, Zara continues to power ahead. And the top line, yeah, you're absolutely right, Tom, is where the surprise really comes from once again.
So we continue to watch the Inditex numbers. That stock up by 4.7% this morning. Just reading some of the reaction from Bloomberg Intelligence this morning, talking about the strategy talking about the consumer there, towards more automation to improve customer service with a parallel track to sharpen the fashion stance. So we'll continue to watch what Inditex is doing this morning. I think we've got some movement in some of the cars as well this morning, Tom.
So we're expecting some of the sales data, sales numbers coming through from Volvo Cars. We have that. The stock is up 1.4% so far in the session. In terms of the data that's coming through, the numbers coming through at a time, of course, when we're weighing up the relative slowdown in growth for electric vehicle demand in Europe. The growth is still there, it's just it's slowing. Volvo Cars saying that May car sales were up 13%, so an increase of 13% for the month of May in terms of car sales for Volvo. Fully electric car sales up close to 60%, suggesting maybe that there's still a little bit of resilience. How much of that is done to price cutting coming down from Volvo? Of course, they've had support as well from their overall owner, Geely, over in China as well, in terms of support for that company. Again, sales up for the month of May, fully electric cars up close to 60%.
Yeah, just looking at the sectors then, we've got retail stocks lifted by Inditex. That's the best performing sector, up by 1.8%. Only one just in negative territory, that's basic resources, and so that continues some of its negativity of yesterday, which in itself is interesting. So retail, technology, consumer products and services on the rise this morning. Let's think about the wider stories that we're dealing with in markets right now. We need to think about political risk, and I'm pleased to say we're joined by Sophie Lund-Yates, who is lead equity analyst at Hargreaves Lansdown and joins us now. Sophie, very nice to have you with us this morning. Political risk is something that we are very focused on in 2024. We've had a few examples just this week of where markets have been wrong-footed, perhaps, in terms of their expectations and then the outcomes of various political events. A lot of those are focused in emerging markets right now. Some risks for some and some opportunities for others, no doubt. What have we learned so far about political risk and how it's going to play out in 2024?
Yes, absolutely. This is certainly a theme that we're not going to get away from anytime soon, not just this year, but I believe it's more entrenched more broadly, and that will be the case for the long term. Now, particularly with emerging markets, what we've learnt really is this is a textbook example of the increased risk that comes with EM categories. Now, obviously, we continue to believe that there are still some excellent opportunities out there, particularly when you look to places like India. However, those political landscapes are particularly volatile, and also because we know that they are even more closely linked to, say, social outcomes as well, which can have, as you know, very, very broad ramifications across markets. It is essentially this textbook reminder that the EM regions are basically facing these risks really head on, and they do have far more reaching ramifications than they do, say, for Europe and the US, dare I say it, when it comes to market reaction.
So the politics in emerging markets front and centre right now, Sophie. We'll have plenty of politics in the UK soon to talk about, and in the United States as well. Thinking about the UK story, I mean, the FTSE 100 obviously a little disconnected from the UK domestic narrative. The other indexes may be more a reflection of that. But we've had real strength in the FTSE 100 in the sense of taking us to new all-time highs. But compared to other markets, maybe not as well performing. So for your thoughts then on UK assets and where you want to get exposure at this point?
Yeah, sure. How nice it is to be on here, though, and talking about a FTSE rally. That certainly hasn't been happening too many times recently. Now, really, what I would say is when you do look at the FTSE, yes, OK, it's had a pretty good run over the last couple of years in particular, particularly year to date. However, what I would say is, as you've just alluded to, of course, we are lagging other regions. Now, a large reason for that simply is a lack of exposure to the super high octane stuff. Now, I am, of course, referring to tech. However, what I would say is within that, I do think that it's masking some potential opportunity in the UK. It's not just that we don't have as much exposure to tech. We have exposure to very cyclical, very beaten up sectors, like some of the big financial giants, like some materials. And I do actually think that there remains quite a lot of opportunity in the UK for those that are prepared to potentially take a little bit more risk. But I do think, for example, the house builders that you were just talking about there, we have some really differentiated names in there with wrought iron balance sheets. It's the same with some of the big banks as well that I think really might be worth some attention at the moment.
Sophie, how much of that is premised, though, on the idea that we are going to see rate cuts? It's really interesting. The story of the last couple of days has been maybe that actually European inflation, Eurozone inflation, maybe is a little stickier than anticipated. Yes, we may get a rate cut out of the ECB. Maybe we'll get a rate cut soon out of the Bank of England as well. But what comes next after that seems to be very much in doubt. And I'm wondering how much this European rally is premised on the idea that European central banks are going to be cutting rates. And I'm wondering what that rally, therefore, looks like if they don't in the same way as the market currently is anticipating.
Absolutely. I mean, we've been saying this for some time, and I believe that there is a disconnect still between not necessarily the timing of the first cut, but the extent of cuts, I think, more broadly for Europe and the UK. I don't think necessarily are matching up with market expectations. Do I think that could cause a dent or a pause in rallies? Absolutely. But actually, I think so much of it is reliant on what you were talking about earlier, and that is the strength of the consumer story. That remains really quite a really strong underpin for a lot of these businesses, and also the margin story. So we know that margins were going to be difficult to inflate this year, but actually overall the picture there isn't as bad as expected, and that is what really analysts and the market have a really keen eye on as well. But what I would say, just to slightly contradict myself, obviously as we head into these summer months and the corporate news starts to slow down, the emphasis on the macro does start to get highlighted because there's nothing else really guiding markets. Yeah. So actually, for now, I do think that interest rate story will probably carry even slightly more weight than usual.
But okay, let's pick up on the consumer and talk more about that. Why do we keep underestimating the consumer, even the European consumer? There seems to be this expectation that the consumer is going to roll over. And we continue to see strength, particularly in the States, I appreciate, but to a certain extent here in Europe. We're about to see the football kick off as well. You've got the Olympics coming up. It's a big summer in terms of consumer spending. How do you think that gets reflected in valuations? How does it get reflected in anticipation, actually, of further spending?
Yeah, absolutely. So you're absolutely right. I think really what people are concerned about, and by people, I mean the market, there seems to be, as you say, this constant drip feeding of fear that, OK, now is the end of the road. Now we have run out. And I think that has stopped valuations from really peaking necessarily to where they deserve to be in the case of some of the high caliber travel stocks, and particularly you were talking about earlier. But I do think that in terms of the mismatch, in terms of why that's happening, is as much as, yes, we are seeing consumer resilience, it is not evenly spread. So this isn't a broad-based kind of rally in terms of consumer spending. They are still being discerning. Certain travel airline in particular are doing much better than others. Zara's doing brilliantly, but other mid-chain fashion isn't. So we are really seeing a very dramatic version of best in class being rewarded here as well. So it's not a case of this is a rising tide that lifts all ships. I think that there is a lot more specific stock stories going on here, and they are obviously harder to discern, and you're not going to see those broad-based moves.
Yeah, it's a more complex picture, isn't it, when it comes to the consumer, whether in the US or Europe here in the UK. So if you talk about opportunities in the UK, whether it's the bank space or indeed the real estate, the house builders, as you touched on. In terms of the timing then, with the political uncertainty, or is there uncertainty here in the UK? That's maybe debatable. And then the BOE. How are you thinking about timing? Do you need to wait till you have clarity on the politics and on the Bank of England before you want to get that exposure, or do you want to be positioning now?
I certainly think that, well, firstly, to kind of address that first comment, yes, there is a bit of uncertainty here in the UK, but I don't think the market is overly concerned, really, because we haven't got that huge polarisation that maybe some other regions face. But at the same time, in terms of gaining exposure, really, what we would say is you want to be looking at the strong calibre stocks, looking at all of the kind of fundamentals that you would be considering normally, rather than trying to necessarily time this around political shocks, because if it's not this shock, it'll be something else that we can't predict. So actually, we'd say, you know, kind of gaining exposure as and when those opportunities present themselves, rather than trying to gauge it on which way the election is going to turn out.
Sophie, thanks so much. Thanks for joining us. Nice to see you. Sophie Lund-Yates, lead equity analyst at Hargreaves Lansdown. Let's get into a quick check on some of the stocks that are on the move this morning. Inditex, we'll start there, shall we? The owner of Zara. And that stock is up by 4.7% this morning. We've talked about how it was some of the top line that did impress. And I'm just reading some comments from a Jefferies analyst saying the trading break update was an impressive start. And as a result, he's expecting a modest upgrade to consensus. So we'll certainly look for that. Does seem expectations are on the rise, as you can see reflected there. The company does have, and this is interesting, on technology and on consumers, the company has a plan to spend $1.8 billion on improving stores and technology. So we'll see how that plays out. Increasing logistics capabilities, part of the goal there. Guy, you're watching some of the auto sector.
The entire auto sector is higher. So if you go to the sector story, every single stock in this sector is travelling higher this morning. Volvo is the story that stands out. It's up by 1.7%. But it's interesting, some of the German car companies are certainly lagging this morning. You've also got this idea that maybe you're going to be seeing Mercedes and others, Stellantis, maybe kind of reining back in once again their expectations, their ambition when it comes to EV. And I think that's a huge story that continues to be sort of negotiated, and I still think there's a lack of understanding about ultimately what this is all going to mean. The whole idea was we were going to use ICE engines to drive the profitability story into the EV story, and that's being undermined at the moment. It continues to be undermined, and I still don't think that is fully understood yet in terms of the implications of it, and what the Chinese are going to do in particular in terms of their interest here in Europe as well is probably not understood fully either. Tom?
Well, autos, yeah. I mean, autos, you know, it's not just about the batteries, it's also about the chips that get packed into these vehicles. And on that question, we've had some developments. It's the Intel story, of course, over in Ireland, the deal there with Apollo, $11 billion US dollars. And then some news coming through from NXP. It's a Eindhoven, Netherlands-based company doing a deal, a partnership with a TSMC-linked company to expand their footprint and investment over $7 billion in Singapore. Singapore really doubling down, as you're seeing as well in countries like South Korea and Japan, in that part of the world, in terms of building out the infrastructure, at least these foundries as well, and factories to build out and continue to crunch out these chips. So that's interesting as well. There's a read across to European chip makers. ASML, of course, essential and the only company that's able to provide, of course, the most high-end lithography machines to companies like TSMC. So ASML getting a lift on the back of this, up 1.2%. ASM International, also based in the Netherlands, up 0.6%. ST Micro of France gaining 1% on that story. Also worth mentioning briefly, Bayer, that stock up a little shy of 2%. It was at 2% on the lines. That Bayer saying that actually, in terms of the verdict coming through from the US and the potential costs linked to the Roundup weed killer, that of course there's faced allegations of causing cancer, that the total number has been moved from 2.25 billion to 400 million. So a significant reduction by a US judge, and Bayer is gaining on the back of that news, close to 2% currently.
OK, coming up on the programme, we'll dive into some of the earnings stories, in particular to the Zara owner Inditex, as it reports better than expected sales for the season. We'll take a look. That's coming up shortly. This is Bloomberg.
As we see the supply chain improving, we keep ramping up. So the more they produce, the more we need, and we are very fortunate to have in front of us a very important backlog of orders to deliver. But that comes with higher rates if we want to be at the pace expected by customers, and therefore I think it will at least take 2 to 3 years to see a certain normalization.
Any company, especially large-scale companies who are willing to be transparent about everything, they'll suffer less. We presented this comprehensive plan to our regulator. Here's one thing I want to make sure everybody understands. This is our plan. It's not our regulator's plan. If we slow it down and stick to the disciplines that will synchronize this supply chain with the insatiable demand for airplanes and stay disciplined on that, we will put all this in a rearview mirror.
The CEOs of Airbus and Boeing joining us yesterday at the Berlin Aviation Summit, which is taking place just over the road here, talking to my good friend and colleague, Benedict Camel. That was the CEO of Airbus. Dave Calhoun, the CEO of Boeing, talking to me. Guys, what they're talking about is the fact that they've got a supply chain issue right now. There is lots of demand within the aviation sector. Boeing's got its own issues that it needs to deal with right now. Dave talking about the fact they need to be transparent. I asked him how long it's going to take to get this business back on track. He says however long it takes. I just wonder whether the market, whether their customers are really going to give them that kind of length of time. There is an insatiable demand out there at the moment for new aircraft. Everybody wants new planes. Demand remains very, very strong. That's what all the airlines were telling me over the last few days. That's my real takeaway over the last few sessions. This is an aviation sector that is still capacity constrained. It is not demand constrained. And that feels like it's inflation to me as well, once again, in this sector. Anna?
Right. Well, that's really interesting, the extent to which, yes, that supply and demand dynamic is inflationary. We've seen airfares play a role in some of the inflation numbers that we've been talking about over the last year or so. Something else that some people talk about as being inflationary is a sort of global decoupling, a fragmentation of the global order to some degree and putting up barriers between China and the United States. Yep. Some people point to that and the reshoring and all of that being reflationary. And I know that is something that is on the minds of some of these aviation businesses.
Well, talking to Dave Calhoun about this yesterday, I have to say I was quite surprised how kind of strong and passionate he was on this issue. Clearly, Boeing is America's largest exporter. He has a huge vested interest in free trade, in globalization, and that's going into reverse right now. And he talks about the fear that he has around what is happening around the world. He's worried about what happens after the US election coming up. He's worried that we're going to see further fragmentation. That's bad for his business, but he just says the implications of it are likely to go even further from a societal point of view, but obviously we've also talked about the inflation point of view as well. He's really worried about it. And I have to say, more and more people that I've been talking to over the last few days around the world really focusing increasingly on this US election, which they're finding really hard to call and really hard to understand.
Yeah, where, of course, Trump, if he gets into office, has promised further tariffs on China. So implications potentially for Boeing from that. Talking of inflation then, services PMI coming out from Spain. The reason I mention inflation is because we know there is scrutiny by the ECB and other officials on the wage story in Europe and the relative stickiness of services. And this is a pretty strong number coming through from Spain in terms of the PMI, services PMI, for the month of May, 56.9. Close to 57 then, well above that 50 level that divides expansion from contraction. So 56.9 in terms of services out of Spain, composite of 56.6. Both of those numbers coming in above the surveys out of Spain. And one wonders if that is a factor that feeds into the conversations from the ECB when they meet tomorrow. Let's get back to the consumer story, though, because Inditex shares are gaining today after the Zara owner reported a better than expected start to the season and first quarter earnings that met expectations. Still on the Spain story, of course. Let's bring in Bloomberg opinion columnist Andrea Felsted for the take on this. Lots of talk about sales potentially slowing. That didn't happen for Inditex. What do you read into these numbers? Do you think this is sustainable?
Yes, they are very strong numbers, considering the weather hasn't been that great this spring. Zara in particular still doing very well.
Yeah, all the talk was of all the rain, all the bad weather, the cold was going to make people not go out and buy summer wardrobe, but apparently they are doing. So that's interesting, and we take that for the sector. Andrea, let me also ask you about what's going on with Shein, potentially listing in the UK, and there's been much talked about. Also, we've seen politicians sort of angling to try and make contact with the leadership of this business. What's the latest on that?
Still talk it's going to float in London. We are waiting for any kind of announcement. Nothing yet. I don't think this is a threat to Inditex. I think Inditex has been lifting its prices upwards. It says it's not a deliberate policy, but it's stretching upwards with quite pricey items. That's a sweet spot. Luxury brands really increasing their prices. The mid-market really shrunk during the pandemic. Inditex is filling that gap. That's quite a different market to Shein.
OK, potentially the biggest IPO for London, if that comes to pass, 50 billion US dollars or so from Shein. Of course, the company, it's based in Singapore, but founded by Chinese entrepreneurs. Bloomberg opinion columnist Andrea Felsted, thank you very much indeed. Let's get to more of the top stories on the Bloomberg terminal this Wednesday. And switching focus, and pretty dramatically, where Hamas has followed Israel in balking at President Joe Biden's efforts to end the war in Gaza. Both sides say their conflicting conditions for a permanent ceasefire must be met before they'll even agree to pause fighting. Hamas wants Israel to accept a permanent ceasefire. Israel insists Hamas must be destroyed before the war can end. President Joe Biden is planning 2 meetings with Ukraine's Volodymyr Zelensky in the coming weeks. The US leader is seeking to telegraph solidarity with Kyiv in its war against Russia, despite plans to skip an upcoming peace summit in Switzerland. The president will meet Zelensky later this week in France on the sidelines of the 80th anniversary of D-Day in Normandy. A second meeting is planning the following week at the G7 summit in Italy.
Banknotes featuring King Charles III go into circulation in the UK from today. The Bank of England says the new notes will only be printed to replace those featuring the late Queen Elizabeth as they wear out. The polymer notes are designed to last at least 5 years, meaning cash featuring King Charles's image will remain rare for some time. Now, I have been entrusted with a couple of these notes. I mean, we say they're in circulation, but as we just suggested in that read there aren't going to be very many of them. King Charles flexing his environmental credentials. We won't see too many of these notes.
Yeah, because they're made of a polymer, aren't they? Which means they last. The £20 notes can last for up to 20 years.
Yes,
so
I thought it was interesting how they last almost as much as their face value by year. So
yes.
five as 10 to last 5
10
years.
10, 20 at 20. That's a nice
Yeah.
synchronisation, isn't it? You put them in your pocket, put them in the wash. And
Yes.
they should last. Apparently, you can post 300 quid in the post and then get these new ones. But I'm not sure if I trust the postal system.
I read this, Guy. I think this is really bad advice. I remember learning, back when posting money was a thing, that you really don't post money. That sounds pretty daft. But apparently you can do that, or you can queue up and get £300 changed into these new notes if that excites you. But use of paper currency, of course, has been on the decline, and we've seen it. I was reading this morning, it's only about 15% in the UK of transactions are actually using cash.
I find it's really quaint that we're talking about money. How often do you actually use notes these days? It just seems to be something that we don't do anymore. I remember my grandmother posting me the occasional kind of £5 note in the post. That was a really big deal. So that was certainly a thing of the past. But fivers these days, £10 notes, how often do you actually end up using them? I think it's great that we still have paper money. I just can't remember the last time I used it.
I think I have to give these back to somebody. To
Andrew Bailey, I think.
Yeah,
the Bank of England. He's just across the road.
I'll run over the road just after the show. Pop these back through the letterbox.
Maybe don't put 300 quid in the post. Guy Johnson. All right, coming up, why women's sport... Guy loves paper money. There we go. Why women's sport is attracting a growing number of investors. By the way, well done, England. England women's team beating France 2-1 in the qualifiers for 2025 Euros yesterday. We're going to head to SuperReturn in Berlin. Stay with us. This is Bloomberg.
Deal flow in the first half of last year compared to the first half of this year, there's clearly a pickup in activity. There is also pressure on asset managers and sponsors to realize assets, to distribute money back to investors. There is a backlog of transactions that were supposed to happen in the last 12 to 18 months that have been delayed, but they are coming, and we're seeing that in the pipeline today.
That was David Hirschmann, Permira Credit's co-head, speaking to Bloomberg at SuperReturn about the pickup in private equity deals. They also talked about defaults and higher for longer rates. Plenty more in that conversation as well. We will get back now to the themes around SuperReturn. The growth in audiences for women's sport is increasing the sector's attractiveness for investors, and private market investors have not let this go unnoticed. So let's join the dots then between private markets and sports. Let's get a sense of how big the appetite is. Our Markets Today co-anchor Kriti Gupta is at SuperReturn in Berlin with a guest. Kriti.
Yeah, Anna, thank you so much. Sports, women investment in sports is really, really important right now, especially in the broader macro environment. When we're looking for yields in different places, alternatives proves to be a really great part of that. go even further and you see that the women's sports investment have actually been growing thanks to, I would say, one of the front runners of that industry who joins me now this morning, Keir Nortman, co-founder of Monarch Collective and Angel City FC, which is, of course, a soccer team based out in L.A., also founded by, I believe, Natalie Portman as well as a part of that investment base. Keir, a pleasure to have you on the program and here in Berlin. We've got to talk about this. We've had Guy Johnson on location in Berlin with the Euros behind him. Sports is a very exciting thing to talk about right now in the summer. You've got the Paris Olympics coming up as well. Talk to us about, from your perspective, coming out from LA with your background in tech, how you're approaching sports deal making on both sides of the Atlantic.
Yeah, well, listen, I think sports is a local business as much as it is a global business. And I think starting with a healthy respect for what are the local dynamics, and then how do you build essentially these global platforms that if you do it right, in the case of Angel City, we sell gear in our first year in 51 countries. But the way you show up is, the way I show up is I try to show up and listen and learn and help. And so we started Angel City officially in 2019. I'd been working on it since the 2015 Women's World Cup. And we kind of earned the right, I guess, to come over here and be helpful. We have now, on average, 21,000 people attending our games. We sold out the last 4 or 5 and have done north of 30 million in revenue in our first 2 years out. And so when I show up in Europe, I come to speak, I come to help, I come to sit with teams and say, how do supporters groups look different in women's sports versus men's sports, and what's specific and unique to Everton, Liverpool, whatever the different teams, may be over in the UK or in Germany.
How are let's go granular here. We're going to kind of use sports as perhaps a way into talking about the consumer, specifically when it comes to things like ticket prices. Airfare has been a big conversation in the past couple of days out of our coverage of Dubai. Walk us through what you're seeing in terms of disposable income. How does that differ? What's your demographic?
Yeah, well, so I will say it starts with the heart, and then we get into the numbers, and I can move between the heart and the numbers, but these are the great cultural institutions of our time. It's the only place where people from 2 political parties sit next to each other and realize they have something in common before they don't. In terms of the consumer demographics, though, when you get into the nuts and bolts of the numbers, I think one of the interesting things about women's sports globally is ticket pricing is more accessible or affordable for everyday human beings. So I'll give you an example in the U.S. An average NBA ticket in Los Angeles is probably in the couple $100 range. At Angel City, it's $45. And so our demographics look a lot more like Los Angeles. They're about 40% 17 to 34-year-olds. It's pretty gender balanced, and it's one of the most fun entertainment products you can find. So you see a big difference in terms of building modern communities in women's sports, where price is accessible and even more accessible in Europe.
It's an interesting dynamic, and you have a background in tech. We should remind our international audience here. A deal making coming out of Silicon Valley, of course. How does that influence how you're viewing the deal flow right now? One of the big questions in this conference, but of course in the broader markets as well, is when are the capital markets going to open up? When is deal flow really going to pick up, as opposed to waiting for the other shoe to drop? Your thoughts?
Yeah, so deal flow in tech versus women's sports is very different, I would say. So in tech, there's always another investment. There's always another deal. And so there's this culture of trying to get in front of the best ones, coverage, how many did you see, what is your top of funnel? And of course we think about that in women's sports, but we at Monarch, where we do very few investments and we're very specific about who we like to work with and what we're trying to achieve, we really look at getting in front of deals months or years in advance, where we're helpful to the operators of that team, that league, those rights in advance. And so it really is about building trust around stakeholder dynamics and not waiting for things to fall on your lap, and being someone that is known, I think, globally as dependable and creative.
So in terms of months, years even, what does the pipeline look like for you? Again, this is coming in the context of the fact that people are saying the pipeline is looking strong right now in alternative investments. Everyone's excited about it. The mood here is very optimistic, almost to a point of concern. What does that pipeline look like for you?
Yeah, so by the way, we say we love to waste time with the right people, because it's not a waste of time. The pipeline looks incredibly strong, and it's really a matter of our own bandwidth and being thoughtful about where are we spending the many dozens of hours to build relationships. But I'd say it's much stronger than I even thought when I started Monarch with my partner Jasmine Robinson in 2023. And we are the first fund that's exclusively focused on women's sports in the world, Monarch Collective. When we started, we were looking at, I think the pace of kind of opportunities is dramatically accelerated in global football, which we call in the U.S. soccer, in women's basketball, in rugby, in cricket, in golf, in tennis. So we focus on media revenue-oriented sports, but they're not easy. And so the real hard part is actually doing very few things very well and getting those investments to convert into long-term partnerships. That takes months and months and hustle and hard work to do it with the right people.
Are you looking for partnerships in the UK, in Europe? What's your eye on?
Yeah, no, 100%. In fact, like one of our core values is around collaboration, and that's a hackneyed word, but I really think about this world as who do you want to build channel partnership relationships with? And so specific families that want to own teams, we can help new families get into business. Specific funds that have a different sort of value proposition than us, who value an all-female team who's operated deeply in women's sports. My partner comes out of the Niners, I come out of Angel City. So we are always looking to collaborate, and sports allows for it much more than tech. And you really have to build into the local ecosystem where people are going to show up and care.
Yeah, all right, very quickly, I'm putting you on the spot.
Okay.
What keeps you up at night? What's your worst nightmare?
Wow, the wrong people owning these great teams and not really valuing how deeply local and authentic these teams should be to bring meaning to people's lives.
All right. Keir Nortman, co-founder of Monarch Collective and, of course, founder of Angel City, the women's soccer team out of LA. We thank you so much. Really talking, Guy, about this idea that sports may be the new alternative investment. She's getting excited about it. She's got her eye on what's going on in Europe. We'll see how that all pans out.
Pretty exciting to see England beating France last night as well in women football, not soccer, football. We play it with our feet, so that was fantastic. Great conversation, Critty. It does seem as if it's all happening here in Berlin, but I want to take you over to Paris. We are going to get back to SuperReturn very, very shortly. We've got some great guests lined up. I have to say, Critty's booked some fantastic people to talk to. David Miller, Morgan Stanley's head of private credit, is going to be joining her really shortly. So just make sure you stay tuned for that conversation coming up. But I just want to take you to Paris, because I think we're getting a shot now of Joe Biden, the President of the United States, arriving in Paris. Air Force One has just touched down in the French capital. This is ahead of the D-Day anniversary. It is the 6th tomorrow. It is the 80th anniversary of D-Day. I have to say, I've been speaking to a lot of US executives, as I mentioned many times over the last few days. They are all heading to Normandy. They are all invested in this story. I was talking to Dave Calhoun about it yesterday. He was talking about his father's experience of D-Day. It's very personal to him. But he's talking about just kind of the parallels as to what is happening in Europe right now. Ed Bastian was talking about the same thing as well. Delta's going to be flying a whole load of veterans over the next few days, or has flown. But it's the arrival of the president here or over in France that obviously will be making the headlines. Some big conversations going to be happening around European security, guys. But they're all heading for Normandy. Tomorrow, obviously, a huge day, a commemoration of the 80th anniversary of the D-Day landings in Europe.
And it looks like the beast is pulling up outside Air Force One in Paris as we await President Biden to walk down those steps and into that armoured car. Interestingly, you're talking about the CEO of Boeing. Boeing, of course, the manufacturer of the B-17 Flying Fortress, based in Suffolk and Norfolk. Of course, the 8th Air Force, their role that they played as well. So there's an interesting link there historically. June the 6th, of course, 1944, the D-Day landings, the most ambitious, the largest amphibious assault ever, World War II, of course. We are waiting for President Joe Biden. He will be heading there, currently looking to step off Air Force One in Paris, Anna.
Yeah, just trying to stabilise those pictures coming to us from Paris, but we are expecting to see the president land there. And as Guy pointed out, clearly the reality of European security right now will be something that plays heavily in the background of these 80th anniversary commemorations of Operation Overlord. This is Bloomberg. This is Bloomberg Markets Today, 43 minutes into a European trading session that shows a bounce from yesterday. Yesterday's sell-off induced by the energy sector, where weaker oil prices weighed on energy stocks. Today we turn around a little bit. Retail leading the pack. Those numbers from Inditex impressing some in the markets, it seems. US futures pointing a little bit higher, up 1 or 2 tenths of a percent. Now, this week, one of the big events we're looking ahead to, of course, is the ECB. It's ECB day tomorrow, and the central bank is expected to start cutting interest rates for the first time in almost 5 years. Markets are regarding the first cut as a given, but the path beyond June is still unclear. Let's bring in Bloomberg's Zoe Schneeweiss, who joins us from Frankfurt. And Zoe, we're building a picture of European data this morning, at least around the periphery and around some areas that are really showing a strong growth story, and that's around Spain and around Italy. We've got the Spain numbers waiting for Italy. I'm not sure if they moved the dial particularly, but we're waiting for, is it confirmation of a rate cut from the ECB? Would that be to downplay its significance?
So we're getting these PMI numbers this morning. These are the second readings for Germany, France, and the euro area itself. And as a reminder, 2 weeks ago, when these numbers hit that and showed incredibly strong growth in these countries, this is private sector growth, those were one of the factors that helped markets recalibrate their rate bets going forward for the ECB. So tomorrow's rate cut is a given. That was well telegraphed, confirmed by almost all policymakers, including Lagarde, that should the data fit the bill, tomorrow will be that first cut. What happens afterwards is very unclear. And initially, another 2 cuts were very clearly a given, even some economists even thinking that there'd be more there. Now, that strong growth does let the ECB maybe think, how quickly do we need to move and how quickly should we move?
Zoe, I'm just going to interrupt you briefly, and just because I want to take you back to Orly Airport in Paris, where the President of the United States has just touched down. He's just met Prime Minister Attal. They're chatting on the tarmac. The President in Europe for a number of different conversations, but clearly the objective of this trip is in Normandy and the anniversary that we are going to see tomorrow of D-Day, the 80th anniversary of D-Day. Obviously a huge moment, and given the politics, given the geopolitics, given what is happening in Ukraine right now, obviously highly germane to the conversation as well, a remembrance of the impact, particularly that the United States has had in Europe. So we'll continue to return to that, but as you can see, President Biden is on the ground in France and will be heading shortly for Normandy and the 80th anniversary of the D-Day landings. Zoe, let me just come back to you. We've also, just while we've been speaking as well, had the Italian May services data. That's down to 54.2, a little softer than maybe anticipated. But I want to talk to you about inflation. There is this growing narrative, and you've kind of referenced it a little bit already, that maybe actually this downward trajectory of inflation in Europe is beginning to stall out. And actually the trajectory may look more like what we've seen in the United States. How relevant is it to compare and contrast what we're seeing in the US right now to the European picture? And can I really, therefore, if we are talking about this, maybe suggest that the ECB can't go too far? And maybe the market is ahead of its skis in terms of what we're anticipating in terms of the total volume of rate cuts we're going to see from the ECB?
So it's undisputed that on the way up,
OK, I think we're having some connection issues with Zoe Schneeweiss over in Frankfurt. Unfortunately, it does happen sometimes, live TV. Talking, of course, about setting us up for the ECB, that decision, of course, tomorrow, the inflationary impacts and whether there's a concern in terms of how the inflation story is evolving in Europe and what that could mean in terms of the synchronisation of cuts from the ECB after the cut that is fully expected by markets and analysts tomorrow, of course, from the European Central Bank. Here's what else to watch out for today. 10 a.m. UK time, Euro area PPI, producer prices and PMI. Talking of the Eurozone and ECB, of course, that will build out the picture. We're getting the services data and the composite manufacturing as well out of Spain and Italy. Some strength coming through, particularly in Spain on the services front. We'll see how the picture in terms of PPI and PMI data out 10 a.m. builds on that story. 2:45 p.m. UK time. The Bank of Canada, that rate decision as well, could be a pivotal moment for the central bank of Canada. 3 p.m. UK time, we're going to get some more data out of the US, this time services, ISM Services Index. We know that manufacturing has come through a little softer out of the US. Then you had the job openings data, and we look ahead to non-farm payrolls on Friday. But 3 p.m. to mark on your diary is the services data, ISM, 3 p.m. UK time. And on the earnings story later, Dollar Tree, so a gauge maybe of the lower end in terms of the consumer impulse coming through on earnings on that front. Lululemon and Campbell's as well. Throughout the day, of course, we're also going to be bringing you coverage of the SuperReturn International event, the world's largest private equity event taking place in Berlin. Let's return to Markets Today co-anchor Kriti Gupta, talking of SuperReturn, who is standing by in Berlin with another guest. Kriti.
Tom, thank you. We started off the coverage this show with talking about one of the private credit investors. We have Permira on. We round out with some alternative investing in women's sports. Now we're bringing in the banking side of it. I'm pleased to say David Miller, head of private credit and equity over at Morgan Stanley Investment Management, joins me right here. Thank you so much for joining us on the program. Look, the theme of this conference, I talk to people over and over again, it's how excited they are about this deal flow. Private equity, private credit even, growing more and more, so much optimism. When does the party stop?
Yeah, I think it's important to put in context the size of the industry gets a lot of focus, particularly private credit. At $1.5 trillion, that seems pretty large, and that's grown over the last 10 years. But that's in the context of over 100 trillion of bank balance sheets, 100 trillion of equity market value, 100 trillion of fixed income. So the growth is, in that context, measured. You have 8 trillion of private equity. It has grown substantially, and private credit is actually following along. So I think it's natural as bank regulations have pushed more illiquid, riskier lending off balance sheet that you'll continue to see private credit grow overall.
There is a narrative right now that post-GFC, the banks in particular have taken a massive step back, especially from the private markets, really trying to eliminate some of that risk, and instead have kind of created created a void, basically, for the likes of the bigger private equity specific firms to step in. What does that relationship look like in the future? Is it still more global Wall Street driven deals? Is it more private equity? Is it a combination? What does that look like?
Yeah, I think the ecosystem has changed a little bit. Certainly banks are more regulated, as they need to be. And so you've seen some of that risk go into private fund format, which overall I think has been good for the financial system. But there's also a complex set of relationships between banks and alternative lenders or private equity firms. And banks are still very much involved in that in terms of how they originate for the capital markets, how they provide advice. And so where we sit as part of Morgan Stanley, we're able as lenders to benefit from the deep relationships that our bankers and capital markets teams already have with companies and sponsors.
So I want to go to deal structure in a second, but let's talk about valuations first.
Sure.
We're in an inflationary environment. There are concerns about stagflation on both sides of the Atlantic. There's also a concern about kind of a holdup within the private capital market space. What does that do to valuations? Given that you're talking about this optimism and this massive amount of new entrants to the space, are valuations now compressed? Does that mean valuations are higher? What does that look like, and is that the new normal?
It's a great question. So we've come in an environment the last 2 years, as you noted, where rates have come up pretty sharply. And so when rates come up, clearly that pressures valuations. So if you look at some of the older vintages going back to 2020 and 21, underwriting assumptions on multiple levels were fairly high. And so now we're in a reality where sellers want to maintain that high multiple, and buyers, not necessarily in this interest rate environment, are willing to pay that. Now that bid-ask spread has narrowed. It's narrowed in the last year. You're seeing deal activity come back, certainly over a lower base from last year. And our view is that that's going to pick up over the course of this year into next year, simply because limited partners in private equity want to see their capital back.
Well, that kind of holdup that you're seeing in the private markets, these lack of buyouts, for example, it's holding up a lot of money on the sidelines as well, to your point. Meanwhile, in Europe in particular, the leveraged loan market has opened up far more, I would argue, than the U.S. has as well. What does that do for European deal flow?
Yeah, I think European deal flow benefits from there being not just private credit. Last year was the only game in town for borrowers. Okay, and so with the broadly syndicated markets coming back, you're able to have options. And so for large deals, that's going to be the purview of the syndicated markets. But there's a huge amount of deal activity in the core middle market, say deal flow up to $1 billion in size. And that's still a very natural place for private credit providers to operate. I'll just give you a statistic. In Europe, over the last decade, the share of alternative lending and middle market lending has gone from 5% to over 50%, really as banks have withdrawn. And also investment banks have skewed their syndicated practice to be much larger. So we think those trends continue, and that will benefit the private credit providers.
When it comes then to some of the regulatory flow, you started off this conversation that kind of the deal flow coming off the GFC, a lot to regulation. There are concerns in the UK in particular that with a new potential Labour government in the works, there is a carried interest risk here. There's a higher tax regime. Even in the States, there's that question of what capital gains looks like in the next 12 months. Does that impact deal flow or appetite for it?
I don't think so. I think private equity has capital providers that are looking for returns. While it would influence the compensation of managers, I don't think that will stop them from looking for the best risk-adjusted returns out there for their LPs. So I don't think it affects deal flow. I think the biggest factor in deal flow is going to be economic growth and, to a second degree, interest rates.
All right, certainly something we're going to be keeping an eye on. David Miller, Head of Private Credit and Equity over at Morgan Stanley Investment Management, joining us from SuperReturn International this morning. Anna.
Kriti, thank you very much for that. Really interesting conversation there. Kriti Gupta joining us there from SuperReturn in Berlin. There's plenty more coming from SuperReturn throughout the day. Kriti on the ground, Danny Berger on the ground for us as well. So plenty of Team Bloomberg coverage. Among others, we'll be speaking to guests from THL, Brookfield, Ares and General Atlantic. So lots going on in Berlin. Tom?
Yeah, there's a lot going on in the semiconductor space. Part of that is linked to Berlin. Apollo, of course, coming in with that bid, or at least that stake, $11 billion stake in the business of Intel over in Ireland. Other deals coming through in terms of NPX as well over in Singapore, linked to TSMC, a business linked to TSMC. But also an update in terms of Honkai as well, because, of course, they are pushing aggressively around AI servers and building that out. They've come out with sales for May up 22%. So Honhai, also known as Foxconn, it's the contract maker for Apple, but is also now building out the hardware for the AI revolution, as some describe it at least. Honhai saying that the revenue for May was a record high for that month, also saying that AI is driving the current quarter to beat expectations. So another kind of gauge point in terms of a touch point there in terms of the demand around AI.
Yes, and just to reflect, just thinking about what we've learned through the programme when it comes to priorities for deal makers. We've been on the ground at SuperReturn then, Guy. That's been taking place in Berlin. Some interesting lines about their assumptions on interest rates coming through there. But, Guy, you're also in Berlin, just wrapping up a visit that's given you an interesting take on global business.
Yeah, we've over the last few days been to Dubai, been to Doha, been here in Berlin. I'm wrapping it up. Final aeroplane of the trip very shortly. I'll be back in the studio tomorrow. I'm going to leave Kriti Gupta here in Berlin. We'll see what she makes of the next couple of days. The football, the big theme, I have to say, here in Berlin. I'll leave you with maybe that thought that the football story is about to kick off here in Europe. Is that going to give Europe the next big impulse? Maybe the ECB should be thinking about what the football story is going to be as well. We'll find that story out tomorrow. We'll leave you with the pulse. That's next. This is Bloomberg.